I'm just sharing my screen here just so you guys have something to look at, but kind of wanted it to go more into like discipline, being patient, which is, perfect example to go over this today because right, Tesla was a perfect example of just being patient and following the chart. Um, right. So everyone always thinks it's just about, everyone always says to me, "Oh, you trade wedges." We've seen this for 100 years. Um, and it doesn't work. But it's really not just about the wedges, right? It's mostly about the psychology and being able to be disciplined and patient behind it, right? It's like the same thing goes for the gym, right? Obviously, the gym's important if you want to make progress, but your diet is more important. So the diet is just like the psychology and the trading. Um, without the right diet and nutrition, you're going to see no progress. So without the right psychology, discipline, and patience, you're going to see no progress in your trading. Okay. Um, everyone's always looking for that magic formula, getting impatient. It's not, there's no magic formula. So you need to follow the price. You need to stick to, the setups and you need to follow the chart. It might sound a little repetitive what I say here every day, but it's really what it is. Right? It's the same thing every single day. Um, and being patient, right? Success in trading doesn't come from catching every little opportunity. It's about waiting for those high probability setups that offer that clear edge, right? It's about making disciplined decisions, even if that means sitting on the sidelines while others are chasing trades, right? Don't worry about others. It means nothing. Don't, be asking other people, right? I said this all the time. Don't be asking, other people, you know, in the chat especially, right? What they're doing, you know, having a community is important, but someone could be trading for 1 week giving advice, right? So you don't know where anyone is. So, right, stick to the guide, stick to the book. It'll work, right? You see me do it day in, day out, and you see my results for years now, most of you, and it works. So, having that discipline and patience, is a game changer, right? So it makes you go from being reactive in your trading to proactive in your trading, right? You're doing the thinking before you get into the trade. Okay. You don't want to be thinking when you're in the trade, right? Tesla, I already had my plan going into it. Enter here, price target up above, stop loss below. Right. That's why I had my alert set there. It never got triggered. I didn't have to think. I didn't have to do anything. Of course, the market's going to go up and down. Of course, options are going to be red. But I played the chart. I played the strength on this name, right? Significant strength, significant uptrend, constantly pushing up, and all right, just playing break of resistance. That's it. Very simple. Um, you love the comment today when someone says the place is dead. Yeah, kind of follow the chart. Of course, you don't want to play going down 70%. That's obviously not ideal, but that's why we size right. And as I mentioned in the book, right, trading is a game of probabilities, not certainties. So if you're not focused on discipline, you're going to find yourself overwhelmed by the emotions of trading, and then that's where all the costly mistakes are going to happen. Right. So, does anyone have any questions on that? Perfect. So that kind of leads into like, right. So emotions, discipline, patience, being mentally clear, not having to think while you're in the trade. But then when you're in the trade, right, you want to be trading those high probability setups. Why do you want to be in high probability setups? Because it gives you a structure. It gives you, a structured, clear, and a typically, a favorable risk to reward, right? So when you focus on these setups, you avoid the temptation to jump into the trades that look okay, but really aren't worth the risk, right? How many times do you see me say, setup looks decent. This looks fine. People ask me all the time, how's this setup look? I say good, but it's not good enough for me to take it. All right. The setup looks fine, it looks good, but it's not good enough, right? All the conditions aren't lining up. but setup wise, it looks fine. But just because the setup looks fine doesn't mean, it's an A plus setup, right? You kind of want all the market conditions to be lining up. Okay. In the book, I emphasize, being like a sponge, right? A knowledge sponge, but filtering wisely. Right? You need to filter information wisely, but still be a sponge. And this kind of applies directly here, right? There's always countless trades happening, but the disciplined trader knows that most of them aren't worth taking. Right. So when you wait for the A plus setups that meet your strict criteria, you're filtering for that quality. So it helps you build confidence because you're only taking trades with the highest chance of success. Right. That lets you avoid impulsive decisions, emotionally driven decisions, and it keeps you focused on your strategy, not just any setup that crosses your screen. Okay. Questions, comments, concerns, thoughts about any of that? Okay. Support and resistance, right? It is the most basic form of technical analysis in the market. Every trader, in my opinion, overlooks it. It's like almost it's too good to be true. It seems too easy to be effective, right? But these levels act as magnets, they act as anchors, right? They give you a framework within the market. So when you identify a support or resistance level, right, you're pinpointing areas where price action will likely react, which gives you structure. It's key to making those confident decisions, right? It's crucial. In the book, I'm going to keep referring back to the book today. In the book, I wrote about finding comfort in structure. All right. So support and resistance levels create that structure, allowing you to stick to your planned entries, your planned exits, rather than reacting emotionally. Right. So, let's say you had identified a support level. If price approaches that level, you can calmly watch and wait for a setup instead of panicking or second guessing. Right. So again, it's all about reducing that emotional volatility. And over time, it builds your confidence because you're making decisions based on, a proven system, proven data, not just a gut feeling. Gut feeling means nothing in trading. And how many times have you had a gut feeling or, a stock goes up a ton and you're like, oh, it can't go up much further. Let me just take puts and, hope for the best. That never works. It never will. Be consistent. You need to stick to the plan. You need to stick to, what we know. Any questions on that? Okay. Flag patterns, right? And building discipline to wait. Right. Like I said before, flag patterns have been around for ages. It almost seems too good to be true. And I see it, right? When I see, like a post online, just trade this wedge, right? It does look like it looks way easier than it really should be. Then when you go try, it's obviously not that easy. But that's because, right, the psychology behind it, the emotions behind it, you need to make sure everything's lining up. You need to chart it correctly. There's a bunch of factors that go into it. But flag patterns really are, extremely high probability setups that offer a clear visual of where the market's likely to go. But the challenge is, right, it requires patience for the flag pattern to develop, right? You need to wait for that clear flagpole to form and the consolidation within that flag before the breakout. So a perfect example is actually just now in members chat. Let me find it, where the option trader 1996 posted. If you check out members chat, he said Nvidia is giving us a flag, right? It's higher lows, lower highs, flagpole. This needs more time to develop. Right? This needs more time to develop. The longer it consolidates, the better. Is this setting up? For sure. Right? A lot of traders would try and take this now, just anticipating a breakout, but that's how you get caught. You need to wait for the breakout to actually happen. right? So in the book, I discuss patience as a strength, and waiting for the full formation of a flag pattern rather than jumping in too soon, right, is a discipline that pays off in the long run, right? You're not just entering a trade because it looks good at first glance. Instead, you're watching, you're waiting, and only entering when the setup is fully formed. Right. This approach kind of reduces regrets and reinforces your confidence in your trading decisions, right? Because you're not acting impulsively, right? So think of it like this. Every time you wait for a complete setup, you're reinforcing discipline, which is the greatest strength a trader can develop, right? I'm extremely disciplined that you see me always wait, 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 wait. Pretty much all I do is wait. I wait for everything to come to me. Um, if it's not fully developed, I'm not touching it. This goes back to what I said before, where, a setup may look good, but it's not good enough for me to take it, right? Estimation is developing. Yeah. Yeah, it's developing. It needs more time. Yeah, it needs more time. Although the thing is that that play that you just posted there, D-Rock, you know, based on current market conditions, right? We're kind of like pushing a bull market here. And significant strength. You could take an entry through the most recent high on a high volume, in the first 30 minutes to the hour or hour, right? So this goes back to my most recent YouTube video where I mentioned, right, applying EMS to, current market conditions. Okay. Few of you are unmuted. I'm just muting you guys because it's distracting. Um, any questions about that? Yeah, but D-Rock, that SMH play is pretty much the same thing as coin, right? All I did was just, or not coin, NVIDIA, right? NVIDIA, right? It kind of like sits underneath this resistance, and you can take it, a push through there. Tesla, same exact thing this morning, right? A little bit of a resistance, and you're playing the strength to the upside. So it's really just depending on market conditions. But CRM was textbook, right? Absolute textbook. Are those lower highs exactly what we look for? Declining volume within the wedge, and then as we break out, volume increases. It really can't get much more perfect than this trade. Okay, no problem. Next, it's all good. Carvana also is setting up right now. I really like this potentially after FOMC, so we'll see if this could break. Volume, right? Volume's like the heartbeat of the market, right? It is an indicator. It's, an extremely powerful one. Right? It indicates kind of like conviction, right? So if you see high volume alongside a breakout, it tells you that there is genuine interest in or genuine interest and participation in that move. All right. So without volume, even the best looking setups can be shaky. Spreads could be wide. Price really, or option prices might not move. Um, then there's no really confirmation that other traders are looking at it, entering it, and backing it up. Right. So in the book, I mentioned volume is the fuel that powers your setup. So if you're watching for a breakout over a resistance, you need to also look at the volume, right? If it's strong, it reinforces the confidence or your confidence and reduces your doubt. But if volume is low, right, it's best to hold back, right? This goes into the EMS guide, trading the first hour and the last hour. It's when volume is highest. If you're trading in the afternoon, yes, the market does trend in the afternoon sometimes. Yes, it goes up all day, it goes down all day. But we're looking for the explosive moves. We want to get in and get out. If you want to, be swing trading, that's your decision. But this, right, we're looking to trade those explosive moves, get in and get out. Right. So looking at the volume and trading these specific time frames, it helps us stick to trades that are backed by market conviction, right? Allowing us to trade with more confidence and less second guessing. Okay. Time frames, right, to control these impulses, right? I trade on the 30-minute and the 1 hour. It's ideal for me to, keep the emotional noise to a minimum while still capturing the bigger moves, whether it be, for a scalp, a day trade, or, whatever. Right. Trading the shorter time frames will create a sense of urgency, and it will 10 times increase the emotional decisions that you'll make because the chart changes so quickly. Right. That's why we avoid the lower time frames, because it creates that sense of urgency. The charts are changing so quickly. Right. So when you go on a 30-minute or the 1 hour, things slow down. It's easier to see. Right. It's like, if your heart's beating fast and you have anxiety, people don't make the best decisions, right? When when they're anxious or their heart's beating fast. When you start taking deep breaths and you slow your heartbeat down, you can kind of see, a clearer picture, right? It's the same thing with trading. That's a sick analogy. I like that one. um, I really like that one. So right, the 30-minute and the 1 hour chart gives you that balance view. It's enough to see significant price movements without the distractions of every tiny fluctuation. All right. So in the book, I emphasize the importance of avoiding distractions. And these timeframes are less hectic, which allows you to approach the market calmly and with focus. So when you're not constantly reacting to every single tick, you're free to think clearly and make decisions based on the strategy. Make sense? Good, understandable. Hopefully that's clear and concise for everyone. Awesome. Perfect, perfect, perfect. Um, Stop losses based on structure instead of percentage based stop losses or emotional stop losses. So right, one of the most effective ways to protect yourself from emotional trading is to, well, obviously create the plan before you get into the trade, but have stop losses based on the chart, the structure of the chart, not based on a fixed percentage or emotional reaction. Right. Like this morning is another textbook example. How many people would have sold Tesla because we were down? I was down 40% at a point. One, I got a bad fill, which there's no excuse ever to really make, but did get a bad fill. Um, but it ended up pulling down. I was down like 40%, but the chart was completely valid, right? Overall uptrend, and putting in higher lows. There's no reason to get out of the trade. So, by placing stop losses or mental stop losses below or like around support or resistance levels or just outside of the flag pattern, you're creating a logical, structured stop instead of one based on fear. If you're trading on fear, you will not be successful. Can't say it enough. All right, I'll say it again. If you're trading based on fear, you will not be successful in trading. So in the book, I talk a ton about rational decision making, right? So when you set your stop based on market structure, it keeps you grounded. You're not tempted to move your stop out of fear or anxiety, which is extremely important. And it keeps you disciplined, right? Back to the main point of this whole thing is discipline, right? It gives you peace of mind because you know that your stop is set based on logic and not emotion. Okay. Resilience and common pitfalls. FOMO, impatience, over trading, right? These are the most common pitfalls that every trader faces at some point. High probability setups are like built-in safeguards against these challenges. So when you have a clear rule-based approach, right, a mechanical-based approach, which EMS, right, that's what it is, enhanced mechanical system. It's easier to avoid chasing trades, or it's easier to avoid taking low quality setups. All right, so it's all about building that safeguard against challenges that every human faces. And in the book, I mentioned accepting that not every trade is yours to take. You don't need to capture every opportunity, just the ones that meet your criteria. Right? There's a million different strategies out there. How many, people change every single strategy out there. I've traded them all. I feel like, as a new trader, everyone goes through every single strategy, right? When you start trading, you're like, oh, this one works better. ICT works better. Level 2 works better. EMAs and SMAs and VWAP works better. Unusual option activity might be the secret. Dark pools might be the secret. Elliott wave might be the secret. This buy sell indicator might, be the secret. There's a million different strategies out there. The strat, right? Trading different types of candles might be the secret, but it all comes down to price action, right? It's all pretty much based off of the same exact thing. It's like the founding principle, price action, which is what we're trading. Simple price action, right? Simplifying it. Right? And you don't need to take every opportunity, right? Just the ones that meet criteria, which this helps you keep your mind calm and your actions focused. All right. So by sticking to the high probability setups, you eliminate the constant or the need to constantly trade, and instead you wait for quality opportunities that align with the strategy. Okay. Yep, you need to spend time planning and building the foundation to make your skyscraper for sure. For sure. Trading is tough, right? If it was easy, everyone would be doing it, everyone would be making money. But with these principles, with the guide that I created, with the simplicity that I constantly, put in your face, you'll all start to see that, consistent profitability. Trading requires, or it's a skill that requires mental toughness, patience, and the ability to block out distractions. It's the same thing as like so many other industries. I keep like thinking about how this is extremely similar to going on a cut, right? Trying to lose weight, trying to lose some body fat. It's literally the same exact thing, right? How hard is it to lose body fat and get lean? It's very hard, right? It requires mental toughness. It requires patience because you're not going to see results right away. And you have to block out the distractions, right? You can't eat candy, you can't eat all that other shit. You have to be able to block it out, right? Even if you go out with friends and there's chips and all that other shit on the table. I want to eat that stuff too, right? But if you want to get lean, it's probably not the best idea, right? And if you want to, make money in trading, it's probably not the best idea to be trading in the middle of the day. It's, to do a lotto here, to take an earnings play here. It's all going to add up, and you're going to shit the bed, right? So discipline, focus, quality setups, right? We're building a foundation. We're building a mindset that will be consistent in the long term.